Hey guys, I hope you're well and welcome to our market update. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. In this presentation and in the next 200 seconds, I'm going to provide you guys with a quick overview of the main markets. We're going to take a look at markets like the Eurodollar, Bitcoin, gold, German DAX, crude oil, and we're also going to talk about the CAD as we have Canadian data coming up in an hour or two. Now, if you're new to TradeCaptain.com, it's a great website. In here, you'll find special stories and market updates and weekly outlooks for primarily the currency markets, but also cryptocurrencies, crude, and the S&P and other indices. Now, before we start, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that will lose all of our invested money. Down here at the bottom on TradeCaptain.com, you can find the link to the risk disclosure. Okay, let's begin. So this is your euro versus the USD, and the overall market is bearish. I'm looking at it from a bearish perspective because if you look at this 4-hour chart, price has been creating lower and lower highs over the last few days, and this is a high actually created in September, so it's actually 1.5 months or so that this downtrend has been in place. And with this in mind, we saw some rejection here as we try to touch these highs, and that will be the 118.81 level. And then when we moved up, people decided to sell again. And I do think that traders that are not short will most likely try to sell around 18.24. And from this level, I suspect the market can go down to this low here, which is 17.31, if not all the way down to 16.76. Now, on the break to the upside, so we take out the 118.81 level, then this downtrend that we're working with here would be over, and this market could potentially reach the psychological level of 119.50, followed by the this would be the September 22nd high of 120. Now here's Bitcoin. Bitcoin created a new all-time high yesterday as price took out above the actual spike here from the 8th of November, and also you can clearly see here on this 4-hour chart, our price has closed on the other side of these different highs here. Now the market is short-term overbought. You might remember that on November 9, we said that traders are probably going to look to go long down here and then book profits up here. Now that actually happened, and obviously this is a special market where people just like to buy and buy and buy. So it's not necessarily certain that we will actually pull back, but I suspect that if we have a pullback, and as long as you're trading above this low, let me see if I can highlight this low, which is the 63.18 level, then I suspect traders are probably gonna look to go long. And I suspect that maybe we'll have corrective move to maybe 7,200, which is down this section here, but you can see this section here. Then I suspect that maybe from these levels, traders will probably look to gonna go long again. It's also, but not perfect, but it's almost a corrective move down to the first Fibonacci level. Now this Fibonacci level has been derived by taking this low here all the way to this high here. If we would just focus on the range we're working with here, this would be a 50% correction of this move. Now the reason why I'm working with this low and not this low is because this is the last nice well-defined little low on this 1-hour chart. I don't think that we need to work with a stop here if you're just trading short term. So again, a pullback maybe down to 7,200. I think that's really what people are anticipating. The alternative is that we can go up a little bit here, try to take out the high, and then we just need to see what happens at that point. Obviously, can most likely head up higher, but I would be careful going long at these levels. So rather, as I said, down here, look to go long on a dip. And as we said as well in the past, I prefer to buy this market on dips. Now here's the price of gold. Gold is actually very straightforward to analyze. Switching to this 4-hour, you can clearly see how the market is just trading sideways between 1263 and 1289. We need to take out the high to turn bullish, or the low at 1263 to turn bearish. Here are the different levels. Take out 1263 and 1255 comes in play. Take out 1289, and the market could potentially try to rally up to this high here from October 16 at 1305. Here's your German DAX. and I think here we're better off working with a 1 hour chart. You can see how the price is trying to create an inverse head and shoulders. This is the left shoulder, this is the right shoulder, and this is the head. The market is for now in a short-term downtrend, but keep an eye on 13,228. So this level here, if we take out this level, this could potentially cause the market to target this high here, which is 13,215, and then this is probably going to be followed by a move to the upside and most likely a retest of this high here at 13,529. Until that happens, this market can continue to go down, and I think it could potentially stabilize. It could obviously go down to the lows, but my general view here is that this is probably going to stabilize. Here's crude oil. This is West Texas, and it's looking really good. As you know, if you follow me and read my outlooks for Brent crude, you know I'm bullish, and I've been looking for this to bottom out. It looks to me that we actually have done that now. So we have bottomed out, and I suspect really that this market could potentially head to the actual high, and as long as you trade above this level here, which is the 54.36 level, I'm going to be bullish. Have another low down here, so probably down to 55.60 and then probably up. Can't obviously know for certain that it's going to pull back, but here's not really the optimal level. The optimal level would have been to go long down here a day or two ago. Now, we do have some data coming up for today. So I think the most interesting is coming out in 46 minutes. It's Canadian Consumer Price Index. It's very straightforward. Higher consumer price index tends to lead to central banks increasing interest rates, and lower consumer price index reduces the pressure on the central bank to adjust rates. So if you look here at the core inflation, it's just 0.8, which is very low. There's not even a full cost for this one on the year-on-year. There is one though for the monthly. So anticipated outcome is 0.3. I guess it needs to be 0.4, 0.5. But then again, it's all about this one, and as you can see here, it's not actually anywhere close to the targets of the target of 2%. And then you have the headline number, which is anticipated to decline from 116 to 1.4. So here again, inflation is not really going in the right direction, which would suggest really that we need to have a rate hike. How this is going to affect the market, I don't really know exactly, but if inflation is a little bit higher, you might see the Canadian dollar gaining. And what are the levels you want to watch? Well, this is the dollar CAD, and I see the trend is bearish below 128.10, which is just high up here. And I'm actually bearish here because the Canadian NFPs were quite good and the US NFPs were not that good. You might remember we did a webinar for this, and the market declined to our target, and then we bounced back up again. And because the overall trend is bearish, I would have guessed that people are selling here. And we are seeing the currency trying to move down, but it's not really succeeding. For now though, because of the very short-term downtrend, this is a high. This is another high. I want to be bearish as long as trade below 128.10, and I suspect this could touch this low here, followed by 126.05. Alright, this is today's market update. We're going to try to do this update on a daily basis at 9 a.m. London time going forward, and it will provide you guys with this quick update on the markets, top news, and as well what's going to happen if we have anything interesting in the economic calendar. If you like it, please follow us on YouTube as well. Don't forget to retweet and follow us, because the more you care, the more you share. Sorry, the more you share, the more you like, the more we care. Thank you.